For those of you guys who were here with me last week, we talked extensively about what to do if you plan to withdraw from your EPF account 3, the 10%, to invest in PRS or perhaps invest elsewhere. First of all, the risk-free or perhaps the low-risk rate is now 5.27 to 5.63%. So it wouldn't make a lot of sense if you're planning to withdraw out the 10% and invest in, say, a risky asset, a much riskier asset, but generates roughly the same returns as EPF's 5.27 to 5.63%. And when it comes to PRS, right, there are fees, there are sales charges. At the end of the day, all of it will eat into your profits. So if you're planning to withdraw this 10%, make sure you select PRS funds that have significantly or at least much higher returns compared to EPF. Or perhaps if you want to invest elsewhere, make sure you can generate much higher returns compared to EPF's 6-year average over here. But actually, even before you do that, right, if you want to turbocharge your returns, you can actually do it with your account 1 savings. And this one is under the member investment scheme. All you need to do is search for EPF Invest and you'll be directed to this web page over here, which you can invest up to 30% of your funds in account 1 to various unit trust funds. There are almost 300 different funds supported by well-known fund providers such as ASNB. You also have Public Mutual, then there's also RHB Asset Management, Principal Asset Management. I think all in all there are 15 fund managers over there. And surprisingly, some of the funds, their 7-year, their 10-year returns, their long-term returns are almost double or more than double EPF's annual returns. So this is really, I would say, a good opportunity, especially if you're young, to turbocharge your returns. Well, how much can I invest in this unit trust? Well, it's 30% in excess of the basic savings in your account 1. Yeah, so the formula is right here. Your balance in account 1 right now minus the basic savings, you multiply it by 30%. That is your investable amount. Now, when we talk about the basic savings, right, it is basically just a target that EPF sets for people at a specific age. Yeah, in order to achieve this golden target or basic savings target of 240,000 ringgit by 55. Now, I know some of you guys in the audience will say that 240k at 55 years old, how can? How is it enough to retire? Well, this is the figure that EPF has set, and it leads to about 1,000 ringgit in dividends every month for the next 20 years. I know it's not near enough, but anyway, so let's say right now you have about 26,000 ringgit in your account 1 and you are 26 years old. So you just follow the formula, you take 26k, you minus the basic savings, which is 21,000, you multiply by 30%. This is the amount, or 1,500 ringgit, that you can invest in unit trust right now through EPF's iInvest. When it comes to choosing the best fund, there are two most important things. First is historic returns and their consistency rating. Yeah, you want to select funds that produce great historic returns. Otherwise, it wouldn't make a lot of sense for you to invest it in unit trust, right? You might as well just leave it in EPF. And the fund has to consistently deliver good returns. Okay, so give you an example over here. You take a look at Astute Malaysia Growth Trust. Okay, its 1-year returns is 41.59%. You compare it with KF Tactical Fund, 1-year return is slightly lower. Surface-wise, this one may seem like a good option. But if you dig deeper, you look at the consistency as well as the historic rating, you will see that KF's Tactical Fund is twice better compared to Astute Malaysia Growth Trust. Yeah, so this is one of the first few things you can look at when you want to choose the best fund for you. But bear in mind, at the end of the day, historic returns are not always a reliable or perhaps the only indicator that you're supposed to use in order to predict future returns. Okay, it's just sort of like a benchmark. You can basically use the fund selector tool within a website also. So after this, if you guys are interested, just search for iAccount, the website, okay? And then you click on Switch to iAccount Classic. And within there, you select EPF iInvest, and from there, you can check out their fund tools. Now, I find the fund selector tool very impressive, okay? Because you can select which specific fund management institution that you want to invest in, what are the fund categories, whether it's growth funds or whatsoever, and the geographical sector, which I find quite amazing. You can select ASEAN, Japan, ex-Japan, United States, Malaysia Titans. There is so many selections out there. And then, let's say you're a young investor right now and you're planning to invest for the next 20 or perhaps 30 years. You have a long time frame. At the same time, you want to turbocharge your returns. In this case, you can have the opportunity to toggle the fund volatility classification to high or perhaps very high to search for growth funds. Then you have the fund consistency rating over here. Yeah, generally I leave this at 4 to 5, yeah, because like what I said just now, you want to choose funds that have consistently performed throughout the years. The most important thing, fees. Well, I'm actually quite surprised that on EPF's I Invest, the initial sales charge is only up to 0.5%. Now, in comparison, public mutual funds, some of them charge 3 to 5%, which means off the bat, if you invest 1,000 ringgit, you will lose 30 to 50 ringgit, and more if you plan to invest regularly. Now, most of the funds that I checked so far throughout the weekend inside EPS I Invest, the fees range from 0 to 0.5%. So yes, some of the funds even do not have any sales charges. And the annual management and trustee fees over here, this one is pretty standard in the industry. It ranges from 0.4 to 1.8%. No, you won't be charged annually this amount based on your initial investment amount. It's not like you invest 1,000 ringgit, then there's an initial sales charge, then every year you're going to deduct 1.8%. Doesn't work that way. This fee is basically based on the net asset value or the size of the fund. Yeah, if the fund makes a profit, the size increases. So you take 1.8%, you multiply it by a bigger fund size, so you can see that the fees is slightly higher. This is also conversely true if the fund makes a loss. Now, why do this at all, right? Why even go through the trouble to go and invest or turbocharge your returns? Well, I'll give you an example. Let's say currently you got about 5,000 ringgit in your EPF account that you want to invest in a unit trust. And you're wondering how long it takes to become 10,000 ringgit. If you take EPF's I would say conventional returns, you'll be a bit more conservative. You round it down to 5%, it will take 14.4 years. But if you were to say, I want to take slightly higher risk, 72 divided by 7, you are 4 years quicker or perhaps 4 years faster for your funds to double into 10,000 ringgit. Currently, this feature is only supported on the web. You won't be able to find it in your iAccount app. You have to do it via your desktop. That's a bit about the first topic that we'll discuss tonight. Allow me to move on to the next one. We'll talk about Maybank's goal-based investment. Now, just a quick disclaimer, the things that I'm sharing with you guys today, right, I'm not paid for this. Although Maybank, they do pay me a bit to write about their goal-based investment, but to talk about it, yeah, no, they're not paying me today. So I'll provide you my thoroughly honest opinions on this new feature over here. So yeah, you check your MAE app, you will see this goal-based investment icon over here, and it allows you to invest for retirement, education, and grow your wealth. So grow your wealth is recommended. And what I find quite neat about this feature is that you can set a specific financial goal that you want to achieve by a certain age. Let's say 100,000 ringgit by the age of 37. Then after that, they will do the calculations for you. They will determine the monthly contributions and then recommend a suitable portfolio that will achieve your financial goals. This simulator over here, like achieving 100,000 by the age of 37, they will automatically factor in inflation. Then after that, if you scroll down more, which I didn't put over here, you can put an initial investment and they'll determine how much you need to contribute every month in order to achieve your goal. Then if you do not contribute enough every month, they'll tell you that, oh, there's a gap of about 51,000 or 52,000 or any amount that is lacking to achieve your particular goal. You can also choose from a list of 30 unit trust funds that's provided by Maybank, and at the end of the day, build your own portfolio. And right now, what's another good thing about this feature is 0% sales charges for your first transaction. Okay, so there's a bit of, I would say, nuance over here that you're going to take note of. Yeah? The 0% sales charge only applies for your initial investment amount. Then after that, every month, if you're planning to use the auto debit feature or whatnot, these sales charges can go up to 1.5%. But upon further investigation, I decide to finalize the transaction. So just one step away from depositing 200 ringgit and then every month they'll deduct from my account. I found out that the monthly sales charge is actually not 1.5%, but 4.76%. So these are the few things that you guys got to take note of. It's a neat feature, yes, but if the monthly sales charge is still at 4.76% or worse, higher, yeah, then at the end of the day, it might be better to just use some of the funds in your account one to invest in the unit trusts that EPF I Invest has provided, right? Or if you're planning to, like what I said just now, withdraw 10% from your account three, then perhaps it's better to consider other fund providers versus this one because the fees are quite high. So for MAE goal-based investment, how did the sales fee went from 4.7 from 1.5%? Well, good question. I don't even know how. Okay, I'm actually curious why suddenly when they indicated in the web itself, yeah, the fees is 1.5%, yeah, initial sales charge at least. Then suddenly when you want to enable the auto debit feature, it jumped up to 4.75%. Because if you look at their webpage over here, right, you scroll down, you will see are there any hidden fees or charges. And they specified here, there will be a one-time sales fee charge ranging from 0 to 1.5% for each deposit. But after that, they don't really disclose that the fees will jump up to 4.76%. So be careful for those of you guys who want to use this feature. I think it only applies to, I mean, this high fee, this 4.76% fee, only applies if you want to use the auto debit feature. If you are manually investing every month, okay, every month you go like, oh, I have to go to the MAE app, tap on goal-based investment, then I'm assuming that the fees will be as high as 1.5%. And by the way, this is not the only fees charged, which is a bit, I would say, misleading because the funds itself also do charge you fees. Remember, like I said just now for EPFs, I invest funds, yeah, all of these unit trust funds over here, they will charge you annual management and trustee fees, yeah, which ranges from 0.4 to 1.8%. And if you check, yeah, Maybank's portfolios over here, and you click on the prospectus as well as product highlight sheet, you will see that the fees range from 0.4 to 1.8%. Okay, so this is not the only fee. This is not the only initial fee, so to say. Then after that, every year, there are these fees 0.4 to 1.8% based on the net asset value of the fund itself. Okay, which is why before you guys dabble into any of these funds, right, yeah, make sure to take a bit of time, take like 5 minutes, tap on the prospectus or the product highlight sheet to really understand what you're investing in and what are the fee structures like. Yeah, because you wouldn't want to be caught off guard. EPF I Invest dividend will automatically be credited to account 1, or now will it be shared among account 3? Okay, this is a good question. I actually don't know the answer for this. I'm assuming that the dividends will be credited back into your account 1, or perhaps the fund manager itself will use it to reinvest your profits or reinvest your dividends. Okay, so you have to check back with the fund itself, because what I've looked into are growth funds only. And normally growth funds, right, they don't pay dividends one. Yeah, because the way you generate returns is the growth of the shares or the products within the fund itself. Shout out to all our gatherer members. Really, none of this would be possible without all your support. Andrew, Wendy, Edward, Alex, Sissy, Urshad, Caveman Balls, Calvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sophie, Faris, Alan, Jackson, Raizan, Hudson G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, Jindan, and Kahmin, as well as all of our learner members. That brings me to the end of my session tonight. Hopefully you guys enjoyed it. And I'll see you guys next Sunday, 10 p.m. Alright guys, bye. Stay safe.